You know, we've been talking about this rotation in the stock market between some of the cyclical stocks, the rebound slash post-COVID plays that have been going on in the market. The cyclical companies, the industrial companies, the companies that are, more deep value have been sort of coming back to life. And then we've also talked about kind of the concept that growth is really scarce. And one way that I can kind of demonstrate that is if you screen out the companies that have positive EBITDA, or earnings before interest, taxes, depreciation, et cetera. Basically companies that have a profit over the last 12 months. If you look at the companies out in the marketplace that have a profit and they have sales growth greater than 15%, it's a very small list. Especially when you bring that down to also say, look, I want to find companies that the market is recognizing. So we can run some screens on that to say, okay, give me the companies that are relatively close to their highs over the last 52 weeks, say within 10%. Companies that have rallied at least 30% from the low over the last year. Companies that have positive trends, they're above their 50-day moving average, 20-day moving average. When you actually whittle that down and then look for liquid instruments, so in other words, you want stocks that you can trade without having an impact, we're kind of screening right now at $50 million in average daily trading volume. You just run that simple screen right now, you literally get a list of like 85 stocks. There's really not that many stocks to choose from. So growth is really scarce. And I also ran some statistics the other day, and actually day before yesterday, and, something like 65% of the stocks are actually still below their 52-week high. So they're still at losses, and from their highs, they haven't really made any progress. So there's a lot of underlying weakness. So it's really important right now, I think, to focus on the area with some of your portfolio, and this is what we're doing, where there is some true underlying strength and growth. And I'll just kind of talk about some tickers that I've been watching, and some of these we have holdings in full disclosure with clients as well as with the proprietary account. But just looking at it today, some of these companies that are coming back to life, like Square, makes total sense. People need to swipe their credit cards, and there's more and more online sales. Square's doing well. Lululemon is setting up for a breakout. So is MMC, Newmont Mining, and Royal Gold. Both of those companies are basing nicely and setting up for breakouts potentially. Splunk, one of the companies that we own, Solar Edge, today did break out, and it popped up 18% today so far. A big breakout in solar. And other companies like T-Mobile. T-Mobile is setting up. And even Zoom, Zoom has used to whip around quite a bit, but it's now entering into a trending zone, and it's basing now and heading higher. So there's just more and more of these companies that are setting up, and even other companies that kind of are your standard companies like Apple. They're kind of starting to look a little bit tired. We had a big breakout in Apple the other day, and what we're seeing is a little bit of signs of exhaustion, meaning that the stock may go into a consolidation phase, maybe go sideways. So there's a lot of underlying cross currents happening. There's opportunities that are developing in some of the growthier names. So the way we're looking at portfolio strategy right now is focusing in on where that real growth is and finding those companies that are at a catalyst from a technical perspective to move higher. Anyhow, a little bit of the cross currents that are happening today. I hope you guys are having a great day. This is Llanes with WealthNet Investments signing off. Talk to you later.